For years, the smartest people in the credit rooms all said the same thing. Banks don't lend on VantageScore. It's a nice number to look at. Nobody approves you on it, and they were right. Then on April 22nd of this year, that quietly stopped being true in the biggest lending market in America. But here's the part nobody explained, and it's a part that actually matters to you. This isn't really a story about a new credit score. It's a story about what mortgage lenders have been using this whole time. Once you know what that is, one single question becomes worth more than anything else you could do to your credit. Find out which score your lender actually pulled. Let me walk you through why. I'm Flo. I teach people how to turn personal credit into business capital. And I want to be straight with you up front because a lot of people won't be. This is a mortgage rule. It does not change business lending. I'm still making it for you because the way I look at it, your personal file is what your business capital gets built on. And this is the first crack in the wall that has been standing for about 20 years. Subscribe and hit the bell. Let's get into it. So let me start with the thing that reframes all of this. When you apply for a mortgage that gets sold to Fannie Mae or Freddie Mac, and most mortgages do, your lender is not pulling your FICO 8. They're not pulling the score in your banking app. They pull 3 specific scores, one from each bureau, and they're required to. From Experian FICO Score 2, from TransUnion FICO Score 4, from Equifax FICO Score 5. Those aren't typos, and they're not just older versions of the same thing. There are a whole separate product line. The industry calls them classic FICO. I'm just going to call them the old scores because that's really what they are. One is a 1998 generation model. The other 2 are from 2004. All 3 of them came out before FICO 8, which is from 2009. So the score deciding whether you get a house is running on math older than the iPhone. And here's what I learned about the old scores. They don't behave like the score you check. They only see today, not your trend. They hit derogatory marks harder. They give medical debt no special treatment at all. And if your file is thin, they may not score you whatsoever. So if your credit has never quite added up, if the number you watch has never matched how people actually treat you, this is probably why. You've been polishing a scoreboard the lender wasn't even reading. That's not on you. Nobody tells you this. Okay, so what changed? April 22nd, 2026. That's the date to hold on to. That's the day Freddie Mac began accepting a newer model called VantageScore 4.0, and the same day Fannie Mae updated it, selling God to allow it. First time in about 2 decades that a mortgage lender has had a choice of which scoring model to use. That's a real headline, and I get why it's confusing out there, because most of the coverage skip the 2 things that decide whether any of it touches you. 1, it's a limited rollout. Only approved lenders can use the new one. Every lender outside that rollout is still legally required to use the old scores. So lenders can now use VantageScore 4.0 is accurate. Your lender now uses it is not, and there's no way for you to know which one you're dealing with unless you ask. 2, the other new model isn't live. There's a second one, FICO 10T, that gets talked about constantly. From what I can tell, it is not approved for delivery, and there is no implementation date published anywhere, not even a delayed one. So if you come across a video naming a date for FICO 10T, that date isn't coming from anywhere official, which brings us right back to the one question. Find out which score your lender actually pulls. It's one sentence to a loan officer, and it tells you exactly which file to go work. So what's actually different about the new one? 4 things. And rather than run you through a list, let me put them side by side because the contrast is the whole story. Time. The old scores look at a snapshot. What does your report say today? The new one looks at up to 2 years of how your balances actually move. So two people sitting at the exact same balance right now can score differently. The one whose balances have been coming down looks better than the one whose have been climbing. Thin files. The old scores may not score you at all. The new one can work with about a month of history in one account. That's roughly 33 million more people who will become scoreable. Collections. The new one ignores medical collections completely. Paid, unpaid, any amount, any age. It also ignores any paid collection of any kind. The old scores do neither of those things. Rent and utilities. The new one can count them. The old scores can't. And that's what the trap is. So let me deal with it right now because I don't want anybody spending money on this for the wrong reason. Paying rent does nothing by itself. You or your landlord have to enroll in a reporting service, and then it only lands at the bureaus that service reports to. Some of them skip Experian entirely. And here's what the ads won't tell you. The only randomized study on this, out of the Urban Institute in June of last year, found an average of about 7 to 10 points, and it was not statistically significant. They couldn't rule out zero. What it did do was real, just different than advertised. Of the people in that study who had no score at all, 57% became scoreable. So the way I look at it, rent reporting is for getting a score when you don't have one. It is not for jumping a tier. Only pay for it if it reports to all three bureaus, and expect single digits. Now, the number everybody actually wants to know. How much higher is the new one? The Urban Institute ran this against Fannie Mae loan level data going back to 2013. On average, the new one comes in about 14 points higher. And the gap is widest right where it matters most. If you're under 640, the average gap is about 27. Now, let me be real with you for a second, because a lot of people are about to tell you the opposite. The new one is not automatically your friend. It can come out lower than what you're used to. If your balances have been climbing over the last couple of years, it sees a pattern the old score simply can't. Same if you've been opening a lot of accounts or if your file is brand new. There's no rule here that says the new score helps you. It depends entirely on what's in your file. So if somebody's promising you a specific number of points off this change, they're promising something they can't see. A few more things this doesn't mean so you don't get caught out. Adoption is thin so far. Between April and June, only about $579 million of mortgages were actually qualified using the new one inside Fannie and Freddie pools. In a market that size, that's a rounding error. Trade coverage called it scant uptake, and honestly, that's fair. The old scores aren't going anywhere. They're still fully approved and still mandatory for most lenders. And the score in your app is almost certainly not the new one and is not what a lender pulls. Credit Karma is on an older VantageScore. So is Chase Credit Journey. Capital One CreditWise switched and now shows you a FICO 8. Experience free tier shows a FICO 8 too. Treat a free app as a direction, not as a number you'll get approved on. And please don't go buy a subscription to track this. There is no consumer product that shows you the exact set of scores a lender pulls. You can't buy it. Pull your free reports instead and fix the data, not the number. So what do you actually do with all this? 4 moves. And the good part is not one of them needs the rule change to go your way. Move 1. Ask, don't assume. One question to your loan officer. Are you pulling Classic FICO or VantageScore 4.0? If they're outside the rollout, they're required to use the old scores, and now you know exactly which file to go work on. Move 2. Compress your shopping into 14 days, not 45. 14 days counts as one inquiry under the new model and under the oldest of the 3 old scores. Some models give you 45. You don't get to pick which one gets pulled, so use a window that's safe under all of them. Move 3. Unfreeze before you apply. This is the one that quietly costs people approvals. A frozen file gets you declined or stalled because the lender can't pull it at all. Freezes are free. They appeal bureau, and by law, they come off within 1 hour if you do it online or by phone. And if you're going for business credit, understand this part. The lender is pulling your personal file. Business credit reports can't be frozen at all. So Thor, the personal 3, get through underwriting, then put the freeze right back. Move forward. Fix the data, not the number. Pull all 3 reports free every week at annualcreditreport.com. That's permanent now, not a promotion. It gives you reports, not scores, and reports are what you want because errors are the thing you can actually fight. And one thing not to do, don't time anything around this rule. Don't sit on a rate window waiting for your lender to join a rollout that has no published expansion date. Ask them today and act on it. Here's the honest bottom line. This is not the biggest change to credit scoring in decades. The old scores are still mandatory for most lenders. What it is the first real crack in a monopoly that's been sitting on mortgage lending for about 20 years. And cracks tend to widen. And the reason this matters to you, if you're building something, isn't the rule itself. The Federal Reserve's most recent small business credit survey, published this March, found that 59% of small firms carrying debt had personally guaranteed it. And the last time the Fed asked the broader question, back in its 2019 survey, 88% of employer firms were leaning on the owner's personal credit score to get financed. Your personal file is the collateral, whether or not anybody says the word out. So stop treating the number in your app as a number that decides your funding. Find out which score your lender actually pulls. That's the whole move, and it's one question. You can send that text today. I put every date and every number from this video into a free cheat sheet. Links in the description and pinned in the comments. You're not behind on this. Almost nobody knows it yet. That's the advantage. Go use it. This content is for educational purposes only. Always follow up with your own research before making any financial decision. Keep that momentum going. I'll see you in the next one.